We also have Luke Broyles. Okay, here we go. There's Sam, yeah. Tuur Demeester, Luke Broyles, the Bitcoin advisor. Sven Hildebrandt. Sven works for the largest crypto exchange in Germany. And last but not least, Weiss, founder and CIO, Bitcoin Investment Group. And the neat thing is, this man here is the man that orange-pilled Saylor. So let's give it up for all these folks. Thank you.
Thank you, Meg. Hello, Prague. We're talking about ETFs. If you guys haven't heard, after 10 years, the SEC was dragged kicking and screaming, basically, after losing a lawsuit, and finally approved the spot Bitcoin ETFs. And by all intents and purposes, they've been the most successful ETF launches of all time. And so we got a great panel today with a lot of individuals with extensive experience to talk all about the significance of these ETFs. And so, fellas, I guess to open up the conversation, I want to hear your initial takeaways of how successful these ETF launches have been and what the implications are when we look out on the next, bull cycle. If we are just entering this bull cycle, do you think these ETFs have the impact that it can have to lengthen a cycle, potentially with the different investor base? Love to throw it to Tuur, and then we'll just go down the panel.
Sounds good. Yeah, so to me, this is the Windows 1995 moment for the Bitcoin space, because virtually everybody who has a bank account now instantly has access to Bitcoin. You buy ETF shares, the ETF has to go into the market and buy more physical Bitcoin to back the ETF. So it's just a huge watershed moment. To me, it's the beginning of mass adoption.
I would agree with that. I think that the ETFs are a pretty clear winner. I don't think it takes a PhD to recognize that. The ETF for Bitcoin clearly outperformed the ETF for gold a decade or decade and a half ago or so. And obviously, with gold, the price of gold roughly quadrupled in the years following that. So I think the ETF for Bitcoin has definitely been a slam dunk. I think having Larry Fink out there explicitly saying Bitcoin is hope. It's funny to think that perhaps Eric Weiss, who orange-pilled Saylor, now it seems like that Larry Fink could perhaps be listening to Saylor. So it's very interesting to see that. And I definitely am pro-ETF approval because obviously the 1 million Bitcoin the ETFs are and have acquired is increasing the value not only of those 1 million Bitcoin, but also increasing the value of the other 21 million Bitcoin that are in self-custody or held in other means. So I think it's a big win for everyone, and I think it's turning a lot of heads in the traditional finance space. The narrative is definitely changing.
Yeah, I agree with everything that's been said. The financial success of the ETFs is pretty undeniable and pretty extraordinary, but I think the more significant component is the regulatory chasm that we've crossed. The ETFs are a vehicle that allow lots of entities who couldn't invest in spot Bitcoin to invest in Bitcoin, whether they're state pension funds, endowment funds, retirement accounts, things of that nature. And once you cross that regulatory chasm from a legality point of view, it becomes impossible for that genie to be put back in the bottle and for Bitcoin to be made illegal. The fact that the US did it serves as a bit of a gold standard, pardon the pun, for other countries around the world. So I think that's going to have huge impacts. And I think we're even going to see countries who have been very against Bitcoin, who are big on regulatory controls, capital controls, like China, for example, right? I think, ETFs are essentially a domesticated Bitcoin as opposed to wild Bitcoin, because now countries can enforce their capital controls. You can't take your ETF and go across country lines. So I think the financial aspect of that and the proliferation is massive.
I have the feeling that when you combine it a little bit from the European perspective and the US perspective, the Europeans had their crypto and Bitcoin ETPs before the Bitcoin ETF was actually allowed. So investing from a European investor perspective into a security that was backed by Bitcoin or other crypto, was easier than for you guys in the US. So you were basically buying a MicroStrategy or something if you wanted to get exposure to Bitcoin. And that was something that was easier from the European perspective back in the day already. So we had ETPs going since quite some years. What I do believe is very interesting, and what I see like daily, is that the fact that the Americans actually approved the ETF didn't do so much on the regulatory side, but it did a lot on the psychological side. So there was like a psychological moment when they were all like, they were looking at the US and it was like, okay, now they have the ETFs involved. And I was all like, yeah, you could have invested in those ETPs since 5 years, but they wouldn't. And now they're like, okay, and they now in America have approved the ETFs, so now we can do it finally. And I was like, okay, that's new. So I think that was one of the things that I actually anticipated that it will be that way, and it is exactly like that. So, I mean, I'm talking to banks and traditional financial institutions daily, and the impact couldn't been more massive than that.
I mean, you guys bring up like the regulatory clarity and what that means for like institutional investors, essentially, who couldn't access spot Bitcoin for regulatory reasons. I mean, I'll throw this to you, Eric. I mean, the first wave of ETF buying, we've heard from Fidelity, BlackRock, VanEck, that it actually has been a lot of retail investors. It hasn't been the institutional investors that really this product would kind of fit their needs. And so why do you think that is? We did see the Wisconsin Pension Fund and others, but the majority seems to be from retail. Well, why do you think that is, and what do you expect kind of moving forward in the next year? Do you think we'll see a ramp up, and then what kind of institutional investors do you think are primed to, gain exposure to these Bitcoin ETFs?
Yeah, so institutional investors, particularly in the United States, have a lot of criteria that they have to adhere to. Some is time-based, some is that institutions just move extraordinarily slowly. To invest in something a year after it's been launched could be really early adoption for a pension plan or endowment fund type thing. And then there's also volume constraints. So a lot of investors, particularly retirement type account investors, they can't be too much of a percentage of ownership of a particular fund. They can't be too much of a percentage of the daily trading of a particular fund. So they have all these constraints that need time to kind of be seeded and allow the ETFs themselves to grow and mature. And then others are just in a position that, let's sit and wait and see which of the ETFs out there tracks the best, which one do we want to invest in. And it's very hard for plebs like us to appreciate this, but the truth is institutional investors really don't care if they're coming in at a $60,000 US price or $120,000 US price. It's not what moves the needle for them. It's measuring twice, being right, and taking their time.
Everybody buys the Bitcoin to the price that he or she deserves, right?
Exactly right.
Yeah, exactly. And so, Tuur, did you have something to say?
Just something that I always think about when I compare institutions with individuals is just thinking about the career risks. Like you're on a team who's going to make investment decisions, and so if you stick your neck out and you say, like, let's do this right now, and I don't know, there happens to be a correction in the market or a regulatory chill right after that, maybe your career is on the line. So for a lot of people, I think that plays a part in, they might be buying privately for themselves, but that doesn't mean they're going to push it into their company just yet.
Yeah, and maybe I can jump on that because it's a good point. When we were engaging with traditional financial institutions, let's say 4 or 5 years ago, nobody would even really talk to us when we were talking about this crypto thing. They were all very averse and said, no, let's maybe do a little POC, let's tokenize something and stuff like that. And this tide has totally changed. So we just announced a cooperation with one of the largest German banks, has 30 million customers sitting behind it, and they will all be able to actually acquire, that's not the ETF, it's the real Bitcoin sitting behind it. And these are talks that were literally unimaginable 4 years ago. And what I mean by that is, at this point in time right now, you are getting fired for not having a Bitcoin strategy, and before that you were fired because you had a Bitcoin strategy, and that's the change.
Yeah, Sven touched on an interesting point that I think is not widely appreciated, and that is the Bitcoin ETFs in the United States are actually depository receipts. So for every dollar that comes into a Bitcoin ETF, those ETF managers must go and buy $1 worth of spot Bitcoin. So it truly, from a supply and demand point of view, really is purchasing spot Bitcoin.
So I think people would look at these ETFs and all the success they had, all the inflows, and what Eric just said, there is demand for the underlying with these products. But they might be looking at the sideways price action and wondering, what's going on here? Like, well, why is it not going up? So Luke, I don't know if you have any ideas in terms of what do you think's going on? We had the halving. There was so much speculation around the halving. There's going to be a supply shock. We have the ETFs. But the price is going sideways. What would you tell people who are kind of concerned, I guess, about the price action?
Well, Sam, if I didn't know that you were asking on the behalf of others, I would say I don't know what you're talking about because Bitcoin's up 160%, or roughly speaking, in the last year or so. At the conference here, this very stage last year, Bitcoin was about $30,000. Now it's about $70,000. Nobody thought Bitcoin could hit an all-time high before the halving. We did. Everyone thought it was going to crash after the halving, and so far we haven't significantly, more than 15, 18, 20% or so. And I think ultimately it just comes down to, like Eric spoke a minute ago, about supply and demand, right? Michael Saylor, who was on the stage earlier today and yesterday, he's having another 800 million via MicroStrategy to acquire more Bitcoin, right? And so I think if people just zoom out and they stop, frankly, complaining about small Bitcoin price moves, both to the upside and the downside, I think people just zoom out and realize there's only 1.7 million Bitcoin on exchanges. There are 800 billionaires in the world richer than Michael Saylor. They each have their own corporations and various interests. And because they are richer, that means that they need a smaller percentage allocation to get the same amount. And so I think just thinking from a first principles is that there's less than 2 million coins. There's 70 million millionaires. There's hundreds of billionaires and tens of millions of corporations. And I think it's just a matter of time. And to your previous question about retail, yeah, Bitcoin was 40K back in January. Now it's 70K, in the last 6 months or so since the ETF was approved. And pretty much all of this has been from retail buys via the ETF. So I think anyone that is disappointed in the price action of Bitcoin, both before and after the ETF, I think that they really need to zoom out and stop thinking in terms of months and quarters and start looking in terms of decades.
Yeah, I have three kind of short thoughts about the Bitcoin price. I think, first of all, I think about financial advisors, like the modern-day priests. Like, they basically going to help people get out of inflationary purgatory, and so they will advise them to do certain things with their portfolio, but they need to be educated, and there's a whole army of these advisors that need to be taught how to do this and be provided with the right PowerPoint slides and all that. So it just takes time. Secondly, I could be a contrarian in this. I don't know. Maybe I'm overthinking things, but I think there's a bit of hesitation in the markets as a whole, given that we have two central banks, Central Bank of Canada, Central Bank of Japan, who started cutting rates, and the fear is that the Fed is also going to start cutting rates, and then we look back historically, there's often been a sell-off in the markets. Things are very tight. There's a lot of banks that are really constrained as far as liquidity goes. So we could have a liquidity crisis. It's not unheard of. Of course, I think, there's going to be another round of massive money printing right after that. But temporarily, there could be a pullback in everything, where some people sell their Bitcoin just to meet margin calls and those kind of things. And then thirdly, and this is going to make me sound like, I don't know, like some kind of 19th century technical analyst or something, but I actually think there is price resistance at the 1,000-gram level of gold. Like, if you look at the Bitcoin price in terms of gold, we hit 1,000 grams in 2021, once more in 2022. We're there again at 1,000 grams because the gold price also went up. And I could totally be, just talking out of my behind here, but I think there is a psychological factor there. And I actually further would speculate that once we push through 1 kilo of gold for Bitcoin, the target is going to be the market cap equivalent of gold, which is, last I heard, around like $700,000 Bitcoin. Like, I think that that could be the next magnet. That doesn't mean we're going to achieve that in this cycle, but I can hear a lot of talk about like, we're going to get it. We're going to get past gold. And that's going to be that magnet that I think a lot of people are going to start talking about.
Next cycle would work well with me as well.
And I guess I'm just saying, just to like make sure so the 1,000 level, that would mean why we go sideways, because there's just hesitation there. That's why the chop.
I'm not so sure about, the gold part there, but just to go one level deeper on the investment advisor point that you made, which I agree with completely. People don't understand completely that just because Bitcoin ETFs have been approved, that doesn't necessarily mean that investment advisors are even allowed to recommend it to their clients. So right now, firms like Morgan Stanley and Merrill Lynch, if the client proactively reaches out to the investment advisor and says, hey, I'd like to buy a Bitcoin ETF, they can sell it to them. But the investment advisor cannot, at this point at those firms, recommend it to their client. So once that education takes place, once that switch gets flipped, then I think we'll see a different approach. Just imagine if someone like Larry Fink, who runs BlackRock, were to come out and say that he thinks that people should have X percentage, 3%, 5% allocation to Bitcoin, or that they should take 25% of what they currently have allocated to gold and change it to Bitcoin. Something like that could be an extraordinary catalyst. And I also think that's why, as Saylor likes to say, all of your models are destroyed. I think all of these models, all of these metrics, all of these convenient correlations that we can find are fairly meaningless. This is something that the world has never seen before. This is a paradigm shift. And to try to spend too much time rationalizing it or putting into a framework that we understand, I think is potentially counterproductive. And we'll see. I think that the tide is extraordinary in our favor. Look how many people are at this conference. This is what people are talking about. This is the most interesting thing on the planet right now. And valuations of every other investment asset are stretched, whether it's equity multiples, yields, et cetera. And people are looking for something to protect their purchasing power that is going to go up in the face of inflation. And there just aren't a lot of alternatives.
I agree entirely. Like the 60-40 portfolio is dead, bond markets are dead, real estate is dead, the tech bubble is dying. What's left?
The other thing is, having had a career on traditional finance on Wall Street, prior to getting into Bitcoin, it's very interesting, but the financial investment world is not a group of leaders. It's a group of followers. And courage is very rare in this world because everybody gets paid very well, everybody's concerned about keeping their job, and nobody ever got fired for recommending invest in the NASDAQ, invest in the S&P, invest in the 6 stocks that have done well, put your money in bonds. But people are afraid that they would get fired and lose their very lucrative jobs for saying, hey, you should buy Bitcoin. So there's some threshold to be crossed and not a lot of courage in traditional finance.
Which, by the way, completely agree, which, by the way, makes the significance of the ETFs even bigger, because now everybody can follow, and this is what, a lot of the financial guys have been waiting for. This is exactly what's happening. But
that indecision, that hesitation is why there is an opportunity now at whatever price it is, 65,000 US dollars kind of thing. That's why we're at 65,000 and not 200,000.
Yes.
So it takes some courage, and if people are sitting there thinking, should I buy, should I not buy, that hesitation is why the price is where it is.
This is maybe just a footnote, but I would add that it's been my observation that I think the brightest minds from Wall Street, from the financial world, have been making the leap to Bitcoin. So there's an actual brain drain happening, and it's been going on for a few years now.
Yeah, what's that saying? It's very hard to convince someone of something when their livelihood depends on them not seeing it.
If I could add a related point to that, I think it's very related to Eric's story with Michael, is that, Eric first brought up Bitcoin to Michael Saylor in 2013. Michael Saylor ignored it, right, as we all know. And Michael didn't adopt Bitcoin or have MicroStrategy adopt Bitcoin until his livelihood depended on it, right? And I think what we're going to see is most financial advisors will ignore it. A small sliver of them will not ignore it and recommend it. And then when Bitcoin does go from $65,000 to $200,000 or $650,000, all of a sudden, there's going to be a lot of clients that are going to want to switch what their financial advisor is, right? Even with this just a 2% allocation, they can go from a 2 to a 20% allocation. And so I think that price appreciation of Bitcoin will put a lot of those financial advisors that are the laggards to be pressured in that way just by the free market of realizing that their livelihood now depends on understanding Bitcoin. So I think it's going to take a long time, but I do think it's coming.
Yeah, so it sounds like, I mean, it just takes a long time for large ships to turn, and they have a lot of due diligence to do. Even the infrastructure is not fully built up for like financial advisors. The platforms they buy don't offer the products. There's only a few that have approved them. So there's just things that need to fall in place before it becomes completely accessible to this, these institutional investors. But let's talk about the trade-offs of an ETF versus spot. I think a lot of us would say that self-custody has significant advantages. Eric, you already brought up one, that you could, leave jurisdiction with your wealth. You can't really do that if you own a security. But let's talk about some of the other ones. Maybe throw it to Tuur, and we can kind of knock out some of these. What are the trade-offs that people make when they buy an ETF versus holding spot Bitcoin?
Yeah, well, clearly, if you buy ETF shares, you trust an institution to hold Bitcoin for you. You trust the government to not, swoop in and confiscate those Bitcoins. You trust the custodian to hold on to all those Bitcoins and not rehypothecate them or to just get hacked. And something that I've been pointing out is that currently a big kind of, a pain point in the industry is the lack of available insurance. Like the margins are razor thin, and even the available capital to actually do a deposit insurance of these billions of dollars worth of Bitcoin is simply not there. There's not a willingness of the insurance industry to insure this stuff. So in a way, there is a chance, looking at it from the positive point of view, there is a chance for the whole world to relearn some of the lessons that we in Bitcoin have maybe learned a long time ago, is that, not your keys, not your coin. If your exchange gets hacked, you're gonna feel the pain. And I don't see a government swoop in and make people whole who have lost Bitcoins in this ETF stories. And of course, things could go well for 5, 10, 15 years maybe, but I do think at some point they will go wrong. And we do have to give some kind of slack to the companies that store all these Bitcoin, because for 10 years they were snubbed, they were just ignored and denied over and over, and then finally, in a period of 2 months, they basically were made aware, like, hey, this is actually going to happen. And so everybody rushed to push the most simple, conservative proposal that had the least risk of being denied. So that's why all these ETFs have very similar profiles right now and are actually putting a lot of risk on one custodian, namely Coinbase. So I do think we're going to see more diversification of deposits. And but yeah, it potentially is. It's a potential for the world to learn some lessons. If people place too much trust in the ETFs, we're going to have a bigger crisis down the road. If people are aware and they kind of put different money in different baskets, the pain is not going to be so big if eventually some kind of hack does happen.
Yeah, I don't think there's a lot of pain or drama associated with it. There's trade-offs to self-custody. There's trade-offs to the ETFs. If you self-custody, at no point will you really be able to borrow against your Bitcoin, earn interest on your Bitcoin, things like that. I would imagine in the near future, those that have Bitcoin ETFs, they're going to be credible firms that will let you margin that capital and borrow against it or potentially earn interest on it. So I think there are a lot of great things about the ETFs. At the end of the day, the big trade-off is not being able to get possession of Bitcoin ever, right? There's no in-kind redemption in the ETFs. I have a Bitcoin fund for family offices and high net worth individuals, and we charge very little fee, but the one key feature of our fund is when people want to redeem, they have the option, if they're ready to take self-custody, to take their Bitcoin at that time, or they can go back to fiat. So I think that's the one big trade-off that people need to think about. But a lot of the types of family office customers that I have, that's not a part that they care about. Their entire life is in a first world country, and they have many hundreds of millions of dollars in assets and other things. They're not leaving the United States, first world country with air quotes, right? But if that's not their biggest problem, is being able to take a bearer asset that they can flee with. But for other people in the world, that's the primary feature and the most important thing. So I think there's merits to every way to Bitcoin, and I think Bitcoin represents freedom, and I just think all participants in Bitcoin, all hodlers of Bitcoin, whatever form they choose, that's their right, and they should be, embraced for being on Team Bitcoin.
Sven, we kind of talked a little bit before, and we're talking about kind of a concentration risk, being all in basically one custodian and possible risk of that. But you also brought up like it's a geographical risk, right? It's jurisdictional risk because it's all in the United States. It's a U.S. company. Can you kind of expand on that a little bit?
Yes, absolutely. I think Tuur hinted gratefully at that. And by the way, it combines what you said, like the financial world is usually not leaders, but followers. That is what we are seeing with Coinbase. Coinbase is the brand name. Everybody's running to Coinbase, so everybody's running to Coinbase, right? This is the leader-follower type. And we're seeing this with the ETFs as well. So I believe that when we are going further down the road in time, we are not only going to see a differentiation when it comes to the custodians. So I think that we're not be seeing only the Coinbases, but the BitGos will be coming in. We'll be seeing the Copers coming in maybe, but then also a diversification when it comes to the jurisdictional side of things. At this point in time, it's quite a challenge actually to custody some of the Bitcoin, for example, in Europe. If you would say, okay, I want to custody a little bit of the Bitcoin that I have actually in France or in Germany or somewhere else, that is actually quite a challenge from a legal side. But I do believe that we will be getting this jurisdictional diversification as well in the long run.
I don't know if the other panelists will agree, but I mean, the way I see long-term Bitcoin custody is that we will have multi-signature custody, meaning that keys will be stored in different jurisdictions, and there won't be an ultimate custodian that controls all the coins. We'll have a lot of mechanisms in place that can provide alert services, monitoring services, which all is going to contribute to less Bitcoin getting lost, less Bitcoin getting confiscated, more certainty for everyone. So in many ways, we're still very early in Bitcoin. The concept of bank may change over time. Like the abilities that the Bitcoin protocol stack enables are quite impressive and are still being actively explored.
I think that the firms behind the largest ETFs in the United States are the world leaders in custodying financial assets, and their involvement, the size of the ETFs, the amount of import that's put on it, the innovation will come from them and their money and their desire to secure the Bitcoin. So I think their involvement in the space is going to drive custody forward in a significant way, and that's a pure positive for the Bitcoin industry.
If I could build on that, my view of the trade-offs is that I'm pro-ETF, I'm pro-freedom. I think people should buy Bitcoin and hold Bitcoin in the way that they want, right? I don't think there's anything inherently wrong with doing single-sig self-custody, self-directed multi-sig self-custody, collaborative custody multi-sig, ETF, holding MicroStrategy, holding a miner like CleanSpark or some other proxy, right? I think there's lots of options, and I'm pro-freedom of people choosing the options. It's just, I think a lot of people blindly buy things that they don't understand the risks of, and unfortunately, in that specific regard, the ETF is extremely easy, and so I'm not in any way against ETF. I think ETFs are good for Bitcoin, but I do think that the ease and the convenience, unfortunately, is going to lead some people to not doing the work. And so the way I view ETFs is that it depends on how people define the problem, right? If people look at the problem that Bitcoin's trying to solve is the need for a number go up thing, then America Bitcoin will do fine, and China Bitcoin will do fine, right? And by that I mean America's ETFs is basically you're buying America Bitcoin, right? If China with their ETFs are basically you're buying their version of Bitcoin, right? And so if you view Bitcoin as trying to solve a number go up problem, then those might be fine for a while, but to me personally, I view Bitcoin as the problem it's solving is removing human beings from managing, manipulating, controlling, and overseeing monetary policy. And so I do not think ETFs are rehypothecating, and I don't think that there's a strong likelihood they will, But I think if we take a tiny, tiny percentage chance and multiply it by a very long period of time, and multiply it by a significantly increasing amount of purchasing power, and I happen to be really bullish, as I think we all are, right? And so I have a very long time horizon. I think Bitcoin's going to rise in value a lot. And so I think over time, we're going to see, as you described, this convergence on what I believe is client of custody multisig, where instead of trusting a political institution, human beings, with single points of failure, right? Coinbase, BlackRock, the government, right? Government going to war, taxable implications, and many other things. And on the other end of the spectrum, the single sig problems, right? What happens if you lose your keys, UTXO management. I really think that, like you described, I think we're very early to seeing the innovations, products, and services there, and I think those can converge. But that's my encouragement to anyone, if they're considering buying Bitcoin for the first time or buying more Bitcoin, is whatever you're doing, just consider the trade-offs, because there is no solution. There are only trade-offs to all of these things, and unfortunately, I think ease of use is not a trade-off that should always be the forefront in people's minds.
I think that's a little bit unlikely, in my opinion.
Yeah.
So these financial institutions, their DNA is to convince investors of all kinds, your money is safest with us, right? If you're BlackRock, if you're Fidelity, if you're Goldman Sachs, if you're one of these institutions, what you're saying to your clients, it's in your DNA since the firm has been around, is put your money with us, it's safe with us. It's completely contrary to that to say, oh yeah, but we're going to put a little of it here, and we're going to give a little power to these guys and a little bit there. I just think that it goes against the DNA of these financial institutions, and it's an unlikely scenario.
Well, just a sign of how early we are. I mean, the largest financial institutions and the oldest custodians, they still can't really even have Bitcoin ETFs on their balance sheets, right? The State Streets of the world, the BNY Mellon, that's the whole SAB 121 thing that Biden just vetoed. And so until that gets turned, we're not even going to have the oldest custodians in yet, right?
But look at what happened, right? What happened was, for those of you that may not know what this was, there was a movement in the United States that banks should be able to custody Bitcoin. Essentially, banks wanted to do their own self-custody, right? And the Biden administration said, no way. And what happened was, they expected the Republicans to be against that, but what they didn't expect was their own party, the Democrats, to turn against the administration and say, no, banks should be able to custody it. And the White House got the message loud and clear that both Democrats and Republicans came together to say banks should be able to custody Bitcoin just like anyone else. So I think we're going to see a change in the future, right? So, and then once that's the case, and firms like BlackRock have a choice of who's does their custody, and they're not forced to use Coinbase, so to speak, then I think we might see some change in movement in custody. But it was a really good example of just how powerful the Bitcoin lobby and world is, and the benefit of having the largest financial institutions in the world on your side. And so I think that all bodes really well for us from a current point of view.
If I could clarify, I fully agree with that. I do think it is a low probability, but like you're describing and like we're describing with the banks taking self-custody, I do think those innovations are yet to happen in the future. And so overall, I'm pretty optimistic. Even though Bitcoin is trustless money, we do still need some form of societal trust. And my hope is that Bitcoin aligns incentives to increase that trust over time. And it's just, I hope that people consider all the kinds of trust that are necessary at all points of this transformation.
Yeah, like there is a lot of talk about trust these days, but trust needs to be earned. You can't just give trust or receive trust.
Yeah, and those, I mean, that's what Eric said. I mean, if one of these large institutions suffer a hack, I mean, their credibility is done. Like, who's going to hold money with these people if they mess up even one time? I think one thing that hasn't been said too is just not everybody has access to U.S. financial markets to even buy. There's billions and billions of people who can't have access to these ETFs, even if they wanted to. And so there's still going to be significant demand for spot Bitcoin, and just the capital efficiency that you get by owning spot Bitcoin, the things you can do with it that you can't do, being able to transact peer-to-peer, censorship resistance, those things won't be lost, and they'll still be extremely valuable to billions of people. And the last thing I just want to bring up, shocked the markets when the spot Ethereum ETFs were approved. And the thing that even shocked me more was when the Bitcoin ETFs were approved, Gary Gensler came out, wrote a whole comment about the risk involved with owning Bitcoin, of how this is an endorsement of Bitcoin. And there was no kind of disclosure like that whatsoever when they approved the spot Ethereum ETFs. And so my question to the panel is, what would you guys like to disclose about the differences between Ethereum and Bitcoin, and maybe some of the risks?
I mean, I would definitely, absolutely, first and foremost, mention you have no guarantee about the token supply of this network. Like a hard fork has happened many times in the past. It can happen again. So basically, a change in monetary policy. So there's zero guarantee that your percentage claim on the market cap of this token is going to be in any way predictable.
So the approval of the Ethereum spot ETFs in the United States is completely political. What essentially happened in the simplest terms is what we were talking about before with the banks being able to custody Bitcoin. When the Democrats in the entire world basically turned against the administration, Trump stepped up and said, I love Bitcoin, I love crypto, you know, I'm your supporter, because he realized there were 50 million votes in the United States, his words, to be, you know, earned by being for crypto and Bitcoin. There are no votes to be had for being against it. And the Biden administration freaked out that they're going to lose this election because they just lost the Bitcoin and crypto vote. So they looked for something that they could do to try to win that group back. So, you know, the SEC, appeared very likely to be rejecting these ETFs, turned around and approved them very quickly. So I think that's, you know, in lay terms, what occurred.
Any comments, Luke, or anything?
Yeah, I agree with that. I think it was a political move. All I was going to add to that, which is perhaps not quite exactly related, but I think this year is really important because we had the ETFs beginning of the year, we had the halving in April, and then essentially what Eric is talking about is political shenanigans around that, right? I fully agree with that. And I think this upcoming election in November, as much as I don't trust any of the presidential candidates, ultimately it's important because we'll see who's president next. 2 of the 3 front runners in America are, at least verbally, pro-Bitcoin. And I think that's going to be really interesting. I don't believe they're actually, quote-unquote, orange-pilled, but I think it's going to be very interesting. What if Gary Gensler is replaced soon, and we know the president has a high probability of being replaced soon? So I do think the ETF for ETH was political, and that's why I don't trust political institutions. It's going to be interesting.
There's also a cynical way to think about, or even more cynical way, I don't know, like, to think about this. It's just that, you know, if you know, fiat money or just, you know, the world of investments, if there's a clear new player who's, you know, knight in shining armor, Bitcoin, then that is a very difficult opponent. Whereas if you can kind of, you know, divide the field and say, oh, but it's crypto, there's all kinds of confusing crypto things, and we're going to let them hash it out. So let us approve an Ethereum ETF and maybe a Ripple ETF. And so then you can, there's a lot more room for political games to be played in that kind of environment with favoritism and you know, basically divide and conquer. So I don't know if there's any kind of, you know, I do think Eric's take seems accurate. But in general, it's kind of convenient that all of a sudden we have this confusion again in the institutionalized field where all of a sudden a security is being wrapped into an ETF versus, you know, Bitcoin clearly being a commodity.
Sven, do you have any final comments that kind of close things out?
Well, final words from my side would be, I do believe that the political establishment has understood that Bitcoin has the potential to truly separate money from state. And that is one of the reasons why they probably acted against it a little bit more than they did with the Ethereum ETF. That would be my final take on that.
If I could add one final note, is that I've heard a lot of people say they think they're too late to Bitcoin now, that the ETFs were already approved and that Bitcoin went up another 50 or whatever %. And just as we close here, I want to remind and emphasize that 1 million Bitcoin on exchanges, 70 million millionaires. If you get 1.7 million of them to take a 7% allocation, it's going to get interesting.
Yeah, I think this, you know, we got to wrap up here. I think all of this, it's about the game theory accelerating, and the ETFs are just increasing the accessibility to gain exposure to Bitcoin. And so we see this at the political front, we see it at the institutional investor level, retail level. It's all accelerating, and the ETFs are just one part of this really large, maturing market that we're a part of. So thanks, everybody, for joining on the stage today. That was a great chat. And thanks, everybody, for listening. Appreciate it.